The Iran-Israel flare-up may be shocking the world for now, but a far more sustained impact on the global economy will be the stimulus blitz announced by China's government and central bank recently. The PBOC, the People's Bank of China, announced a 20 basis point repo rate cut, but more importantly, a 50 basis point cut in reserve requirements. Now, this 50 basis of RRR cut basically gives the banks more cash, which the government intends will be used to buy government bonds. And the government is going to issue a lot more bonds. 2 trillion yuan of special sovereign bonds. This cash raised will partly be given to families who have more than one child and partly to local governments to lighten their debt and help them stimulate their economies. So is this time different? Will this stimulus work and trigger a faster growth, pull China out of its, 4-year slowdown? What are the implications for the world suffering from an onslaught of cheap products from China? I have with me economists from the 3 top global rating agencies. I have Kuijs from S&P Global Ratings, Harry Murphy-Cruz from Moody's, and Jeremy Zook from Fitch Ratings. Gentlemen, thank you very much for joining me. Thank you so much for your time. Luis, if I may start with you. The China stimulus this time seems to be encouraging consumption. Are you on the verge of increasing your GDP forecast for the country? Do you think this one works?
Well, good question, Latha. We actually just published an outlook the morning before some of the announcements by the PBOC and other regulators came out. We are a little hesitant to make a big change to the outlook for the simple reason that, yes, we've had some monetary easing. Unfortunately, at the moment, monetary easing probably won't make a big dent in the economy. We're waiting for the fiscal side. And there are rumors that that is going to come, but we haven't had an announcement. So for now, we are, encouraged by what's happening. We see the authorities care about growth, which is a good sign. We are reluctant to already start to change our growth outlook.
No, I agree with you. What even I was speaking about distributing money to families seems to be sourced information. But if that indeed were to come, Luis, if we were to see, income transfers to families, as well as, some trade-ins for those who want to, those who are stuck with houses, do you think that will make you change your mind?
Well, I think, a meaningful fiscal easing, and hopefully also with some of those measures, that will make people feel more comfortable about spending, people feel more comfortable about, their access to health and education, so that they will reduce their saving rate. And I think these kind of measures would really help improve confidence and probably shore up growth.
Well, let me come to you, Harry. What's your sense? 2 questions, actually. Will this help China? I mean, will it propel it to even 20 basis, 30 basis faster rate of growth? And more importantly, will that mean that China will stop being such a disinflationary force? Will it consume more steel and iron and thereby push up global prices a bit?
Well, what we're most encouraged by is exactly what you're talking about, with a focus on the consumption side of the economy. If we look at stimulus in the past, so often it's looked at infrastructure, it's looked at big building, it's looked to kind of manufacture growth in tough times, whereas the reports that we're seeing on the fiscal side of the stimulus this time is very much trying to address the problems that are in China's economy. And at the heart of that is a household sector that isn't confident enough to spend. It's not confident in the future of the economy. And so righting that is going to be incredibly important. I think the supports that we saw last week, and certainly, the official announcements of what we're going to need to see before we really pull the trigger and start lifting our growth expectations. But from what we've seen, if we do see that fully implemented and implemented in the right ways of targeting household consumption and trying to boost that consumer confidence, then we expect it to add around 0.2 percentage points to growth this year. So for us, that would push it to that around 5% growth target that officials have set. But also, given that this spending is coming so late in the piece, and also that really I think it's a a flag that there's more supports to come, well, that suggests that next year is probably going to look a little bit better as well.
Okay, well, same question to you, Jeremy. Would you agree that at least the outlook looks like China's on the right path, or are you still not convinced?
Well, I think with the latest announcements that we saw last week, we are seeing maybe a bit more of an effort to coordinate monetary and fiscal policy. And so this is quite an important signal, I think, in the authorities' willingness to try to tackle some of these issues when it comes to flagging domestic demand in the Chinese economy. Now, I think, the monetary measures that we saw last week, the big announcements there, again, we think those only have a relatively modest impact on the growth outlook. When it comes to demand for credit, it's really about the demand side rather than the price of credit. And so monetary policy at this point is somewhat limited in its scope. So the fiscal announcements that we have yet to see, I think, will be very important for our expectations of where growth will go this year and next. Already this year we've seen fiscal support running below our the expectations that came out of the budget in March. So we'll also have to assess whether the new fiscal stimulus is kind of filling in that potential gap. Or if this is kind of new fiscal stimulus, and again, how this is targeted, if it is targeted.
Okay. So basically, Jeremy, you're not convinced both about the quantity of stimulus and also you're not convinced whether it is for income transfers and consumption. You would wait to see. Is that your thesis, much like Lewis?
Yeah, I think we have to wait on the details of the fiscal stimulus because that is what will be most important.
Fair point. Lewis, the bigger problem that the world is grappling with China, I mean, before I come to the internals of China, is this huge disinflation that China is engendering. Because until now, they were, as all of you have said, they've been investing more in investment, in production. And since there's not enough people inside China consuming them, they've dumped it on the world. You have Indian steel companies complaining that the steel from China is $50 lower than their own production cost. Do you think this disinflation will somewhat recede because the government appears this time not to be concentrating on production?
Yeah, I think there are, of course, China exports a lot of things to a lot of countries, right? And I think there is a structural issue, and that is that, I'm sorry to say, the Chinese manufacturing sector is very competitive. And so they're able to crank out stuff at pretty low prices. Now, of course, that has been amplified by cyclical problems, cyclical issues, and the real estate downturn is the biggest one of them, of course. So if the Chinese government is able to turn the local housing market around, that would really change the dynamics on the steel market, its own steel market, and that would dampen a bit that pressure that you have from those steel companies. But I think the competitiveness of Chinese products globally won't go away, even when we have a pretty meaningful resumption of growth in China.
Okay, your thoughts, Harry? Do you expect that disinflation is going to remain as bad? Solar panels, EVs, steel, furniture, toys, will they continue to face anti-dumping duties from across the world?
That's certainly the global trend at the moment. We've seen that in the US, we've seen that through EU, we've seen that most recently in Canada and also parts of Latin America as it relates to steel. Now, those price pressures are, they're not going away. As has been said, China has very competitive domestic markets. They have invested heavily over a long period of time for those efficiencies, and there have been some subsidies that obviously have helped there as well. The better growth outlook doesn't necessarily change that for China. Yes, some of that would be absorbed, and a turnaround in the property market would certainly add to the demand for steel, which would help with prices globally. But I think that broader question as to where is the world headed with tariffs on China, if we look towards November, certainly there is a risk that things only become far greater with global tariffs than the opposite would be true.
Okay. Oh, yes, the November question I'll come to in a bit after the commercial break. But before the break, I want to get two of these big global developments out of the way. Lewis, would you worry that the Red Sea flare-up can have a debilitating impact on global growth, at least in the near term, at least in 2024?
You know, Latha, anytime we have issues in the Middle East, we see the oil prices responding, right? And we all depend on oil. So if the oil market were to really, end up with 10, 15, 20% higher oil prices, then definitely that will increase inflation in all our economies, and that will make it harder for all our central banks to continue easing their monetary policy. This is not only true for India, it's also true for the developed economies. And so this is clearly something that we all need to watch.
No, but, let me make the question stand on its head, Louis. We've had so many central banks cutting rates, a stimulus in China, a higher than expected rate cut by the Fed, fairly strong growth in India, rate cuts in Europe as well. And the Red Sea flare-up has been there. It's just gotten accentuated a little bit more. It's not that Iran is new to the war. In spite of all this, I mean, crude is just $73. It's far away from those 80s and 90s that we saw even as recently as April. So do you think it can really rock global growth? Should a central bank like India be really so scared? $73 is something we have seen, and we have seen 25% more than that.
Yeah, I think your point is very fair, that we are entering this situation with an oil market that is pretty benign, right? And we've actually, if we also need to look at why are these prices, why have they been pretty benign? Oil market experts have scaled down their forecasts for growth, global growth of the demand for oil. That, of course, by itself is not necessarily a good sign for the global economy. But yeah, that's a fairly benign market. But of course, if you look, for instance, at the RBI, they have been basing we are all basing our expectations of the RBI starting to cut later this year on a fairly benign oil market. And if that were to, if that picture were to change, we might have to revisit some of those timetables.
Oh, yes, they are meeting on October 9th to give us their policy, and they have a very, very good excuse not to even sound dovish. Apologies for that straying into non-China questions, but I have lots of China questions on whether the property market has been fixed, the local government has been fixed, and therefore what will be the implications for China and the world. All those questions coming after the break. Welcome back to this China special Indianomics. Maybe I should have called the show Chinanomics for now. I have with me the economists from the three top global rating agencies, Kuijs from S&P Global Ratings, Harry Murphy-Cruz from Moody's, and Jeremy Zook from Fitch Ratings. Gentlemen, thank you very much for your patience and for waiting on. To resume our China analysis, Jeremy, there have been news percolating out of China or leaking out of China that there are some trade-ins given even to property owners, that is people who own half-finished homes, and even trade-ins for exchanging consumer goods. If this is the way it works, then are you more encouraged that China is coming out of its 4-year rut?
Yeah, I mean, that has been one of the key means by which the government has tried to boost domestic consumption. They have implemented a domestic trade-in program for things like automobiles, other household appliances. We've seen some limited success from these initiatives. Households have boosted some of their consumption of these goods, but it has had overall a relatively modest impact. And I think when we look at the details of the fiscal plans and potential plans to expand that particular program, that's something certainly that we're quite interested in on the domestic demand front for China.
Well, Louis, it's ultimately about more consumption. And one of the reasons why Chinese consumption got broken was that the wealth effect went away. About 2 years back, the Chinese indexes were back at 2008 levels, wiping out, about 1.5 decades of wealth effect. And likewise, the property markets, which I have been speaking about. But now we have seen a return of life to the Chinese indexes. FPIs are pouring in. As well, there seems to be at least an end to the bottoming out of property prices. So do you think these two can encourage the wealth effect in consumption?
I think definitely wealth effects matter also in China. They probably matter especially with regard to housing. More people own housing than stocks in China. And unfortunately, so far, the housing prices have actually kind of continued their slide. So we're still waiting for that bottoming out, that turnaround on the housing front. If it were to happen, and I do think that we're getting closer to that bottoming out, that would definitely help. It would help directly in terms of, demand from the housing sector for things like steel, white goods, all these types of things. But also it would boost confidence because the house owners, when they feel that, as you mentioned, when they feel that their wealth is going up, they will also become a bit more relaxed in spending. So definitely, this is something that we're looking for.
What's your take, Harry? There were also, statements coming in, or not necessarily sourced to the authorities, but sourced information that a part of the money is going to the local governments. Now, the LG, special vehicles were the ones that were not able to continue their loans to property developers. If the next set of, 1 trillion yuan is going to local governments and their financial vehicles, would you be a little more optimistic of the property market turning?
Certainly. So I think that's one part that kind of addresses the systemic risks that have developed from local government financing vehicles and the debt that has already been accumulated. And then we're seeing the challenges that are arising now when you've got a property market that's going south and revenues that are needed to repay that debt are no longer there. That is sort of, I think, one issue that we're seeing with the property market. I would be looking first and foremost at how we actually ensure that the property market finds that floor in a sensible way. There is clearly a correction in the property market that needs to occur, but it needs to be done in a way that doesn't exacerbate pain in all other parts of the economy, which we're seeing at the moment. So really softening those falls and hopefully finding a floor towards the middle or back end of next year, I think is sensible. That then allows not only the demand side of the economy to do better, but also, as has already been mentioned, household confidence to start to lift. We've got 60, 70, 80%, depending on where you are in the country, of household wealth tied directly to real estate. So obviously when you've got those house prices falling, then that is having significant implications on the decisions that households are making. Are you going to spend your income, or are you going to try to add to those precautionary savings? And at the moment, we're seeing those precautionary savings being topped up quite quickly.
Lewis, are you convinced that the local government problems are at least on their way to getting resolved? What would be the most crucial next step that you're expecting, which can mend both local governments and property?
Oh, you are ambitious, Latha. If you look at the problems with regard to local governments, our colleagues looking closely at this would say that you need more than 1 trillion to fix that.
Oh.
Yeah. So, the local governments really have a very tough job in the sense that they're, what we all expect them to do, their expenditure responsibilities don't match with their revenue envelopes. And if the government, if the central government were to issue 1 trillion in bonds and, help these local governments, carry out some payments that are due, that is helping it in the short term, but it doesn't really fix the longer term problem. So we need to fix that revenue envelope. We need to match those expenditures with their incomes, and that is not yet on the cards.
Oh, that's very important, what you're pointing out, that the problem is way bigger than even 1 trillion yuan. Harry, we haven't started off on what would happen if there is a Republican victory, but quick thoughts on what happens if it's a Republican victory. Does Chinese growth and global growth get scaled down by about 50 basis points or so? And the other question, what if it is, what seems the polls seem likely, if it is a Democrat victory? then would you be more confident?
So the Republican victory depends on what can actually be implemented in that victory. So if we're getting a divided Congress and some of the proposals that the former President Trump has announced can't be implemented, well, then obviously things are a little bit more stable. It's if we do see those 10% universal tariffs on goods coming into the US being implemented, if we do see that even bigger 60% tariffs on Chinese goods coming into the US be introduced, then there are significant implications not only for the US, for outside of the US and for China. For China specifically, I think it's actually important to think about the stimulus measures that came through last week in the context of what November could look like. Clearly, tariffs are becoming more and more frequent. The prospect of more in November is very, very real. And for China, with exports and manufacturing being really its only key growth driver at the moment, if we do see more barriers to its ability to export pop up, well, then really it doesn't have a strong enough domestic economy to be able to fill that void. And so that's why I think it's really encouraging that the reports are that we are seeing more support for households. They've pledged to arrest the falls in the property market, which, as we've spoken about, is a key handbrake on growth. And so that, I think, in some ways is starting to shore up the domestic economy, a part of the economy that's been ignored for quite some time, particularly households, because of some of the challenges that it might be facing overseas.
Okay. I'm being warned I'm out of time, so 10 seconds to Lewis and Jeremy for the US angle. Lewis, do you think that a Democrat victory would be a huge positive for China, simply because foreign funds have stayed away for fear of these kinds of tariffs as well? They have come in because of the stimulus. Do you see that, a kind of pole vaulting China if it were a Democrat victory?
I don't think I have very strong views on this at the moment in terms of who will win, how much that matters. I do think that if you look at the political spectrum in the US, being tough on China is one of the few things that everybody agrees on. So I would not expect a lot of easing on this front.
All right. Quickly, Jeremy, Democrat victory, will that make you positive on China?
Well, I think as Lewis mentioned, I mean, there has been a bipartisan agreement in the U.S. towards competition with China. So I would expect more of the status quo of what we've seen during the Biden administration. Of course, a Trump victory would have more significant headwinds, add more significant headwinds to the Chinese economy.
I'm a stock market reporter as well. So for me, it's just that money on the sidelines might rush into China if it's a Democrat victory. Just that. It's just that the shots will be cut. That's the expectation at least, but we've got to wait and see. It's such a binary event. Gentlemen, thank you very much for spending time and parsing the situation in China. I can see that Lewis and Jeremy are far more skeptical. Harry is a little more positive that things are turning around in China. We'll watch with interest as to the future developments. Thank you very much for watching this special edition.